gold leading the way. Gold is already 40% above its 2011 levels. I tweeted this a few weeks back, but silver remains 30% below its 2011 levels. And so you got this kind of crazy gap between these two metals that are completely unsustainable. So, none of us, in my opinion, own enough silver. And I think this is extremely bullish for that. So, let's just say, what if we're going to grow our way out of this and not see a stagflation environment like we're talking about here and end up seeing major industrial changes and all sorts of things that actually help silver in a huge way. This could be the decade of silver even. Who knows?
The People's Bank of China is quietly amassing significant gold reserves, exerting upward pressure on an already tense gold market. This surge in demand, coupled with a mix of Eastern central bank buying and renewed interest from Western institutional investors, is propelling gold prices sharply higher. Geopolitical tensions and anticipated interest rate cuts are expected to sustain this bullish momentum. Tavi Costa, macro strategist at Crescat Capital, notes that many monetary authorities are shifting toward bolstering their balance sheets by backing currencies with tangible assets like gold. This trend could fundamentally alter the US dollar's role as the world's reserve currency, signaling a pivotal moment for global finance. The data backs this sentiment. Central bank gold purchases more than doubled year over year in the last quarter, reaching 186 tons according to the World Gold Council. Since the start of the year, central banks have acquired a staggering 694 tons, keeping pace with last year's record levels. With their relatively low gold reserves compared to developed nations, emerging market economies are likely to sustain this rapid buying trend into next year. Overall, global gold demand hit 1,313 tons in the third quarter, a record value exceeding $100 billion. Investment demand also surged, more than doubling year over year to 364 tons. Costa further emphasizes that addressing economic challenges through growth may necessitate fiscal tightening and monetary easing, potentially devaluing the US dollar. This scenario reinforces the case for gold and other precious metals as essential assets in an evolving economic landscape. As central banks and investors continue to drive demand, gold is increasingly positioned as a cornerstone of financial stability in uncertain times. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Absolutely. I think it was undeservedly negative for gold, although I can see why gold would sell off. If you think about the reasons, is potentially just because he's likely to be a pick that will change quite drastically the probability of government that has been so reckless for so many years. If there's ever somebody that could potentially change that could be him. So you've had 10-year yields actually decline on that day, and gold sold off significantly. And that's just I think, misunderstanding the bigger picture of his pick. I think Besson is a very capable leader, number one. I think he's probably one of the best Treasury Secretary picks we've seen in many decades. And I think this brings a lot of changes to the precious metals industry, given the fact of his own views mentioned in some of the interviews that he's done 3 weeks ago, for instance, with capital allocators, where he mentions in a question to him where he has said that basically gold was his largest position and that we're approaching potentially a realignment of the global monetary system, very similar to a Bretton Woods kind of moment. And I do think we're about to see something along those lines, and that he wants to participate on that from the inside and the outside. And so all these things are extremely important. None of us really know exactly how this will play out. But this is a significant change to the global economy, given the fact that we're seeing central banks accumulating gold in a large pace, and also the fact that we know that they meaning monetary authorities, are in need to really replenish and also enhance their balance sheet by backing their currencies again with a metal like gold. And so these are real important changes in the dynamic of how the U.S. may play a role here in terms of the reserve currency status. I think as Bassett has said many times we can grow our way out of this, and this is probably your last chance to do that. But that comes at a cost. That comes at a cost of the dollar. And the dollar needs to be devalued, in my view, in a large way, as we see the cut of fiscal spending along with potentially looser monetary policy in order to accommodate the debt. And all that is going to have an impact on the dollar itself. So this only strengthens my view about the US dollar.
The silver market remained steady on Wednesday, consolidating just above the $30 level as traders assessed momentum ahead of the Thanksgiving holiday. This sideways movement suggests a potential basing pattern, though the holiday-shortened trading week adds uncertainty. A key factor influencing silver is the strength of the US dollar, which has exerted pressure on the metal. However, Tuesday's release of the Federal Reserve's FOMC meeting minutes hinted at a potential pause in rate hikes, which could ease this drag on silver. Despite near-term fluctuations, silver's long-term outlook remains bullish. Tavi Costa notes its undervaluation compared to gold, alongside growing industrial demand, particularly in solar energy, and monetary appeal. With silver still 30% below its 2011 peak, these factors suggest it is well positioned for significant gains, potentially making this the metal's breakout decade. Let's get back to the interview.
It's the most exciting metal out there because I just don't know how, if we see a stagflationary environment where gold really trades a lot higher, just gold moving higher should be extremely positive for silver. Then we have this move towards solar panels that even Musk has tweeted about being one of the main sources of energy that we may see in the future. And how will silver play into that if that's the case? And then you have the monetary aspect of gold leading the way. Gold is already 40% above its 2011 levels. I tweeted this a few weeks back. But silver remains 30% below its 2011 levels. And so you got this kind of crazy gap between these two metals that are completely unsustainable. So, none of us, in my opinion, own enough silver. And I think this is extremely bullish for that. So, let's just say, what if we're going to grow our way out of this and not see a stagflation environment like we're talking about here and end up seeing major industrial changes and all sorts of things that actually help silver in a huge way. This could be the decade of silver even. Who knows? I mean, I don't know. I'm just talking about probabilities, and I'm just trying to express my views about how bullish I am in the metal, but it's hard to pinpoint how big the opportunity is, but I do think there's major opportunities here for the metal to do very well. This is going to be the challenge is it really stagflationary, or is that's the part I haven't figured out. I think I fall more in that category too, but certainly growth could play a role here too. Like you could see an environment, well, let's say it's the 70s was a very stagflationary era, right? But if you look at nominal growth in GDP was positive throughout the whole era. And then I know what people say, they're all going to say, well, but that's because of inflation. Yes, that was inflation. Real growth was a little bit different. In fact, the equity market didn't go anywhere throughout the whole decade. I don't know if that's a redux of that. Like that's the part that I'm thinking a lot about. I think the equity market may reflect that because the valuations are so high that I'm not sure we can see a lot higher unless we're going to hyperinflate out of this, which is another possibility. I mean, if policymakers fail, we can hyperinflate our way out of this. And that's a scary world for where gold could trade in that environment. So the point being is that those questions might be too technical to answer right now. And maybe we don't have to go that far. But not that we do know this, but what, you're trying to get to a level of confidence to deploy capital. And in this case, it's hard to believe that this set of potential outcomes we have on the table will not benefit precious metals and will not benefit miners in response to that. So there's a lot of things that are mispriced in a world where these assets become critical again. And so this is very interesting, actually. I think this is one of the most exciting times of my career, at least.
The shifting dynamics in gold and silver markets reflect broader economic transformations, highlighting the strategic importance of these assets in a volatile financial environment. As global institutions and investors accumulate precious metals, their roles as safe haven investments and essential components of monetary systems grow more evident. These trends underline the potential for significant price movements and structural changes in the global economy, making staying informed and engaged with these developments crucial. What are your thoughts on the future of gold and silver as pivotal assets in international finance? Share your insights in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.